June. What's going on? More smoke and mirrors at OPEC. Pete McGuire from XM.com. Pete, welcome to you. Lots of moving parts in that sentence. We've got a producers meeting and we've got an OPEC that's welching. What gives?
Well, good afternoon, Carson. Yes, when you look at it, Abu Dhabi next week, the market's had a very, very strong uptick, nearly up 9% last week, and that's been an absolute delight for all the hedge funds and, of course, money managers and retail. So that's the first side of the story. The other side of the equation is the extra production, 200,000 barrels, the Libyas, the Nigerias and these sort of players, and less going to the US. So there's the compliance talks. All of this will be discussed, no doubt, come Abu Dhabi. And let's just see. It's above the 200-day moving average, Carson, which is a very strong point for WTI and Brent.
Okay. Meanwhile, the hedgies are of an appetite to be doing what? How are you judging the ebb and flow there?
Going long, they're shutting down or closing a number of short positions or a large contingent of their shorts, buying long, and as it's rallied above that 200-day moving average, that's really giving it some momentum, also above $50. So it's get out of the way, it's going stronger, and you could take WTI to 51.5, you could take Brent close to 54. But it's not unusual. It's just, that'll get exhausted again, and then you'll see a little bit more price volatility and probably come down again.
Because this seems like deja vu. Last year we were talking a rebalance right about September.
Yep.
And hedgies got burnt because they bought into that and it never eventuated.
Well,
so
exactly
tell me this time is different.
Well, I'm not suggesting it's different, but there's certainly been more momentum from OPEC's consideration, and even the Russian oil minister Novak has said that he believes there'll be a balancing in the second quarter. So, he's running out of time. We're 1 month in, but if it gets to that point, say, November or certainly October, November, then that will really put a little bit of more momentum to the upside. Don't take your mind off, of course, to the US dollar. You were talking earlier, but it's had a massive collapse, and that US dollar index sitting at 2.5-year lows. It really had a big washout.
Pete, it's Adam here from Shores. I just wanted to talk a little bit about iron ore. We've sort of seen that price up sort of 5% to around 73.70 today.
Yes, Adam.
Our analyst Peter O'Connor has now started to. Most analysts have baked in around $50 for their iron ore long-range forecast. He's actually upped it by up to $55. Have you sort of started to see the market starting to now edge up a little bit higher on those long-range forecasts? I
think so. You've only got to put your mind back at them. A couple of years ago, we were at 190. So, yes, it collapsed at 50. I think at the current pricing of 73, look at the US dollars having some degree of consideration. Also, be mindful as far as copper prices and energy. They've all had very, very strong upticks. Copper's at I think at about a 2.5-year high as well. So it's all adding to the stimulus of pushing ore higher. And at the current price, maybe the long term's going to be the 60, 65. Very hard to put a pinpoint because sheer volatility and the price moves are just, monstrous week on week.
Mark, you want to weigh in on this?
Pete, tell me what you think the political ramifications are of the currency in these markets that are trying to, the OPEC worlds and Russia and, Venezuela, who obviously can't organise things in a way that the US are happy with. With the lower dollar, what do you think they do? Do they just subtly pump more, or do they just accept the fact that Donald Trump's pushing the currency lower regardless of whether he means to or not?
I think, well, first off, they're getting a higher price mark, and that's some consideration because as the dollar goes lower, naturally, energy prices traditionally go higher. So this could be a nice play for those guys in the sense of the producers. There's no doubt that the Trump administration wants to see a lower dollar, and the other side is all of the, the Russians, the Venezuelans and so on, they'll get a higher dollar value, which in turn is not a bad thing. With the Saudis, as far as budget cuts and all of this, it could be wonderful for a lot of their coffers. So, the trade-off is going to be, I think, a weaker dollar. I wouldn't be surprised to see that US dollar index, around that 90 level come, September, October. And so there's further downside there, and I think that's naturally going to push up ore, going to push up copper, and, of course, the energy. And watch out for gold.
One other question, mate. What do you think about the gold at the moment in terms of, with Korea, North Korea, South Korea, Japan, China, US responding to trying to drag as many people into the argument they had with North Korea? What do you think that does to gold? How do you see gold, say, 3 months from now?
Well, I think, Mark, when you think of it, 1207 was the price come about 3.5 weeks ago. We're now at 1275. US dollar was washed out in the month. So all of that is adding, and then you've got the geopolitical concerns. There's no doubting that he's got down those long-range ballistic missiles, so he's saying he can hit the US now. Trump's not having much of an argument on that. So that all, in some consideration, really does underpin price. And the way it's moving at the moment, you could have a 1300 handle or higher in the short term, considering geopolitical and, of course, US dollar, further weakness. So I think overall, it's gold, silver, and a number of the other precious have had a nice run up, and I think that'll probably continue, Mark.
And your thoughts on the currency in general over the dollars over the next, say, I don't know, to the end of this year? How do you see the US dollar playing out over the next year?
Well, the US dollar index, I mean, that's the great barometer to really examine. If you look at the euro, we're at very, very strong, euro versus US dollar. And the index is sitting at about 93.5 for the US dollar index. I think you'll probably be at that 90 level by September, October, and then probably further weakness from there. I'm not sure where it'll end up by year's end, but I wouldn't be surprised to see an 88 or 89 handle. That's going to force the Aussie higher. That's going to be a concern for the Reserve Bank here, naturally, and what they do as far as interest rates. So our dollar, you could be seeing an 82, 83. I know it's wonderful for retail. I mean, the traders are loving it with the huge volatility spikes. So that's the side, Mrs. Watanabe and all of the retail land.
And on that basis, we would say thanking you, sayonara.
Sayonara.
Talk to you anon, Pete.
Arigato gozaimasu.
Very well done. All right. Can't beat that.